Welcome back to another interview, and this time we have Mike Schellinger here. He's also known as perhaps somebody looked up at the Microcap Club leaderboard and saw MikeDDKing, and maybe perhaps you guys thought to yourself, well, who is this person? And well, that's Mike here. And he has been full-time investing since 2006 in the Microcap markets. He, for a period of time, was also partner with Microcap Club. And he's known as sort of having a disciplined methodological approach that he perhaps attributes to his computer engineering skills. And unlike many who chase, speculative stories within the microcap sector, he prioritizes profitability, tangible business results, and well, he balances, having to look for all the SEC filing with personal life, which is not always easy to do. And well, nice to have you on here, Mike. And
Nice to be here.
yeah, so I introduced you just a little bit, but can you perhaps add some details and things you'd like to mention in that regard?
Yeah, that's a great introduction. First of all, and thank you for it. So I'm married and have 6 kids. So I'm an engineer by training, but my dad was an accountant, and most of my siblings are accountants. So I've got a lot of accounting in the blood. And in fact, before I decided to be an engineer, I thought about being an accountant. And ironically, I'm more of an accountant at this point than I am an engineer. But
you like the numbers, huh?
well, I do to some extent. So how I got started in investing is, so my dad invested his own money, and he also did some investing for so he had some clients that he did investing for, and so early on, when I got out of school and had a little bit of money to invest, and this was prior to online brokerages, where you had to pay I don't know, it's like an $80 commission to buy, and
call and all of this,
yeah. And so what we would do is he would say, ask me if I wanted to invest, and I basically invested in anything he did, because he was a pretty decent investor, kind of a microcap investor too. And so we would buy it, and we'd split the commission and have it delivered as 2 certificates. This yeah. So he was a buy and hold investor, and he I think only invested in profitable companies at that point. So I was working in the engineering world, and then in '99 I decided I wanted to try to figure out how to do this on my own. And I started looking around. I used screeners, and I was looking for profitable companies, and turned out most of them were microcaps. And that's how I became a microcap investor. It was kind of by accident. It wasn't like I set out and like, oh, I'm going to be a microcap investor. It's like, oh, I found these companies that had low PEs, and so I just kind of naturally gravitated towards those, and that's how I did things. So now while I'm still mostly a microcap investor, I like to be a growth investor as much as possible. So I'm looking for small companies that have a niche that can grow, and have a good management team, and so that's kind of
all these good traits.
yeah.
And you mentioned sort of, was there perhaps any particular catalyst that brought you to sort of become more interested in investing, or was it really just you stumbled into it, or was like
well, so I stumbled into it, sort of, and then it turned out that I was doing this while I was working full time, and it turned out that I ended up making more money investing than I was in my full time job. And at a certain point in time, I realized that I couldn't do it all. I couldn't be an investor at the amount I wanted to be and work a full-time job because I was managing a
Mhm.
team, and I remember when I told my boss I was going to quit, he's like, "Oh, can't you do this on the side?" I'm
Yeah.
like, "I've been doing this on the side for like, I think it was like
Yeah.
6 or 7 years at that point in time."
Exactly.
And
Yeah.
and
And
uh,
yeah.
I couldn't do it that way anymore. I mean, part of the other problem is like, if you wanted to take a conference call, I couldn't do that during the day, so I had to listen to the
Mhm.
replay. Well, if you're investing in a microcap, if they say something in the call that makes you more
Yeah.
bullish, you know, by the time you get to it the next day, if you listen to the conference call at night and then decide to buy more
Yeah.
next day, the price has already moved because of that.
Yeah.
So it was really hard to do this full time, to do both of them like at a kind of full time level.
Yeah.
So I took the
Yeah.
leap of faith that it was going to work out, and here I am, 20 years later, still doing the same thing.
Yeah. Yeah. And enjoying it, right? I mean,
For the
uh,
most part,
it,
yeah.
yeah.
On most days, on the up days, it's
Yeah. Yeah.
enjoyable.
Of
On the
course.
days it goes down, it's not as enjoyable. But
Yeah. Yeah. Right.
so
And
it's life, such as life.
yeah, exactly. And you talked about this story in the 80s, right? How you were interested in sort of AI, right? And
Yeah,
sort of already saw the potential that it had. So and you also talked how there wasn't enough compute, right? And now
yeah,
this is, well, changing rapidly, right?
yeah.
So how do you see the sort of current advancements in AI perhaps shape the investment process for a majority of small cap investors, and how that potentially changes? I mean, I assume that it's already partially implemented in like your investment process, right? So how do
A
you see
little
that?
bit, yeah, a little bit.
Mhm.
So AI is phenomenal in what it can do, and
Mhm.
it's like, so what I learned about it, but back in school compared to what it can do now are two entirely different things. In
Yeah.
fact, um, so just a little quick, interesting backstory. So for the class I took in AI, I had to do a project, and the
Mhm.
project I did was to play the game Connect, to write a computer program to play the game Connect 4.
Yeah.
And I figured out how to get it so that it could be a lot faster at looking ahead
Mhm.
and figuring out what the best move was. So what it could do is like, like if going down a path would cause it to lose, it wouldn't like look at all the other possible moves after that. So
Mhm.
it didn't like look at it was smarter about how it analyzed the game. Okay.
Mhm.
And I forget it, like it somewhat accelerated the process, but it was like it could look at the best move like 5 moves ahead in the time it previously
Mhm.
would have taken to look 4 moves ahead or something like that. Um,
Mhm.
and I'm like, well, this stuff is all cool, but the computing power is not near where it needs to be,
Yeah. Yeah.
and that was 1988 or so, I think. Um,
Mhm.
then a couple of years ago, uh, you
Yeah.
know, I'm like, huh. I pretty much totally
ChatGPT.
forgot
Yeah.
about it. I'm like, this is wild. I guess
Yeah.
my prediction was right in 1988.
Yeah.
And here we are. Let's see, 20 some years
Right.
later,
Yeah.
or actually 30 some years later.
Yeah. 35. Yeah.
Uh, and now it's coming to fruition. So I use it a bit in my investment process, but um, the one thing I tend to think of is there's an old Ronald Reagan quote that says trust but
Mhm.
verify. And that's the way
Yeah.
I tend to think of AI, because you can't take what it says. If you write up a good query, you can't just take what it says um, exactly,
Mhm.
exactly and say, oh,
Yeah. I
this is a
mean,
good idea.
you might be able to decrease the probability of a bad output, but certainly not, decrease it to 0%, right?
Right, right. And there's other things, there's things that AI can miss. So what I tend to do is I use it, first of all, like it can go through a conference call transcript and
Yeah.
and like do that, and it takes you an hour to like read through the
Mm.
whole, and it can do it in 15 seconds.
Yeah.
And so I use it to augment my process, but I won't do something, and I won't invest in a company unless I verify everything myself manually.
Yeah. Yeah. Of course.
And someday it may be to the point where you can trust things more, but that
Yeah.
it'll be interesting to see when everybody has that if
Mhm.
that's the way it turns out, if when everybody has that capability,
Yeah.
how are the markets going to work?
Yeah.
Because it doesn't, you know anybody can type something into chat gpt. Of course, I think
Yeah.
there is a skill in knowing how to best harness that power, but yeah, anyway.
Yeah. Mm.
So
And
that's a bit
and
of
also, yeah, and also having the enough of a background, let's say, knowledge to be able to, you know, prompt it up at a company, and then
yeah,
also be able to use this as a good supplement. Because if you're not at that sort of uh, skill where you haven't arrived that you can do it all by yourself and you just use it as a supplement, then you still have these hurdles you have to sort of find out yourself, right? I think that's
yeah,
something that
yeah,
perhaps people overlook, that
yeah,
that's a skill that might be lost over time, perhaps.
yeah.
So that can also happen, right?
I
Yeah.
think there's also like a place where AI isn't good is nuance.
Mm.
Like
Yeah.
if you're listening to a conference call, there's certain CEOs that like, they say something and you can pretty much
Yeah.
take it to the
Tonality.
bank that
Yeah.
that's going to happen. They
Yeah.
won't say something unless they're 100% certain it's true. Or
Mhm.
if they're not certain about it, they'll tell you where they're not certain. And
Mhm.
so like sometimes like knowing that, this particular CEO is very reliable or this CEO is
Yeah,
full of
exactly.
it. AI doesn't know that, but
Yeah.
you as a human can know that. And
Yeah.
someday maybe AI will be able to do
Yeah.
that, but that's a tough hurdle it's
Mm.
hard for a computer to do that.
Yeah.
So
And yeah, many microcap investors, they argue for sort of uh, an extreme concentration, right? 3 to 5 stocks, maybe seven, six, seven, right? But essentially to the point where it's a pretty high percentage of the portfolio, right? And you have sort of a 10% hard cap on cost. So how do you sort of handle that when you have a position or a company that really performs and gets to the point where it becomes 30-40% of your portfolio? Like how do you handle that sort of situation, that position sizing and
yeah,
portfolio
well,
management?
well, it's funny. I don't remember. I'm sure you're right that I said that hard cap, the 10% hard cap at a cost. But I can tell you right now, I have
Yeah.
something in my portfolio that has gravely violated that rule. If that was
Well, I mean, rules can be violated sometimes,
right,
right?
right, yeah, yeah. And I hope I'm
Yeah.
right on that one. Let's just say I'm not certain I am. So,
Yeah.
um, so here's the thing with microcaps. Like this one company, I'm not going to even say what it is. Um,
Mm.
Members of Microcap Club might be able to figure out what it is, but
Yeah.
but I'm not going to say what it is here. Um, uh, it's like the best idea I can find right now.
Mm.
And but the problem with liquidity is like, or the problem with microcaps is liquidity. Um, and this particular company, I'll tell you, I own between 3 and 4% of the company. If I wanted to sell, if I decided
Yeah.
I wanted to sell all that
Yeah.
tomorrow, I might be able to get 50, I might be able to sell it at 50% of the price that I paid
Mm.
for it. So
Illiquid.
with my,
Yeah.
yeah, yeah. So with illiquid microcaps, you have to be able to scale in and scale out. So that's part of position sizing is taking that risk in microcaps is taking that risk into account and making your decisions accordingly. And you know, it's you need the wisdom of Solomon sometimes to know when
Yeah.
to take a particular risk and when not to take a risk.
Mm.
And it's not I don't know that anybody could ever, answer when, you know, what is the best way to do it. Things you're just, you
Yeah, I
take your
mean,
chances and
yeah,
you live with the
yeah,
results.
yeah. The way I see it is just you can decrease the probability of a bad outcome happening, but certainly you cannot mitigate a risk of phasing out of a position at the wrong time, or in a or executing it in a bad way, right? I mean, there's a difference between just alone the selling part, right? When how you sell, and there's just so many little nuances that sometimes get into
Yeah,
it that yeah, it's
yeah, yeah.
yeah,
And other thing I would say about buying and selling is if you're a microcap investor, you almost have to have level two
yeah.
quotes,
Mm.
because doing it without that, you're flying blind.
Yeah,
Um,
and sometimes it can be a good indicator of what is to come. So yeah, it's
Sometimes not, yeah.
yeah, that's for sure. Yeah,
But
uh,
I guess the way I look at it, if somebody is selling heavily,
mhm,
I mean, you never know why they're selling heavily,
yeah,
but if they're selling heavily, that's a clue that something is going on there. Maybe, maybe as they just need to raise the money,
mhm,
uh, you know, or they have better investment ideas. It might be that they figured something out that the rest of the market hasn't figured out. So
yeah,
that's the hard part. And I think, some of the challenges for me are like, I generally own, I think like at this point, probably upper 20% of different names, but there's a limit to how many names I can be, um, know well at
yeah.
any given time. I mean, I've
To have
researched
confidence, yeah.
tons of companies. I mean, I think the numbers, I forget what the numbers are at, but I want to say it's like I've done fairly deep due diligence over the years on like 1,000 companies.
Mhm,
Um, but I'm only up to date on probably if I own, let's say I own 30 companies now, I might be up to date on 60 of them.
yeah,
And the other ones I've got, I might have information that's 20 years old on some of them,
yeah,
which is probably almost worthless.
yeah,
um, but if it's still the same CEO, um,
yeah. You
you know,
can you
you,
can get that out of your list if
yeah,
it's bad, right?
yeah, or well, you can know, you'll understand, people change, so you understand what
Yeah,
the person was 20 years ago, but they may have
yeah,
changed, and they're,
yeah.
so
Mm.
so
And yeah, you also mentioned that you missed a 100 bagger by not selling, or because essentially you were holding through the decline, right? So how does your sort of exit checklist look today? Is it like, what's your lesson from that, so to speak? Is what I'm trying to get at it.
well, I still own that name, and I still
Mm,
think it'll probably do reasonably well over time, but
mm,
whether I'll get back to that high water mark
mm,
is probably doubtful.
mm,
um, it's a very illiquid microcap.
mm,
Okay. And I don't remember at this point exactly what happened when it hit the peak. I mean, it was so long ago. Um,
mm.
but I remember buying the stock the very first time
Yeah.
because it was the week my sister was getting married, and I was
Mm,
working in a hotel room, and they published their report, and I like started buying it right away.
mm.
And I bought almost all the shares that traded for a month. You know,
Yeah.
which wasn't a whole lot of money,
Yeah. Yeah.
honestly. But we're talking about something that's that illiquid. So you know,
Mm,
I don't remember what happened on the sell side. I vaguely recall some details of it, but you know, I think it was all liquidity, or greatly a liquidity problem, and some of it may have been my perception of like, I think some of the hardest things can be is like knowing when the trend has changed and what is an outlier for results. Let's say, a company is increasing their earnings every
Yeah.
quarter for years, and all of a sudden there's a quarter that their earnings decrease. Well, is
Mm.
that a fluke? Because of, it's can be really hard to know whether that's a fluke or whether that's a change in
Yeah.
trend.
Mm.
And you weigh all the pros and cons, and then you make a decision. And sometimes it's a good decision, sometimes it's not. And
Yeah.
it's largely, I tend to think of investing as somewhat of a game in statistics.
Hmm.
Because I know what tends to work and what tends not to work, but identifying concretely what falls into one category and what falls into another category, it's a judgment call.
Yeah. Exactly. Yeah.
So sometimes you make a good judgment call, sometimes you make a bad judgment call. It's
Mm.
the problem is we can't know the future, right?
Yeah.
And and
You can
and
only
so
estimate it,
yeah, you
or
can
try
only
to.
estimate it.
Yeah.
Yeah, and sometimes you're right, sometimes you're wrong. Um,
Hmm.
I tend to do, you know, I don't just look at SEC. I look at SEC filings, press releases, the company's website. I do Google searches for various things because, like, sometimes you can find out, like my largest holding right now, that violates the 10% rule. Um,
Yeah.
they uh, sometimes they execute contracts with public entities where there might be a
Hmm.
request for proposal. So there's some public information you can find that, let's just say, is not so public. It's like,
Yeah.
if they're responding to an RFP, they're not going to say, hey, we're responding to this RFP, because that just tells their competitors, you know, oh, maybe if you haven't looked at this RFP, you
Yeah.
should apply for it. So for
Yeah.
competitive reasons, they can't say that, but you know,
Mm.
and their competitors are probably doing what I'm doing, by the way, anyway.
Yeah. And
So yeah, so there's things you can figure out, but yeah, you have
mm.
to just sort of weigh
and
everything.
yeah, in within your investment process, right? When you come to the point where you want to start talking with management to sort of get an idea of what their personalities are and so on, like what are perhaps some personality traits that you're looking out for, or that you find, let's say it's a great to have thing, so to speak. And what is one perhaps where you're like, okay, this makes me perhaps a bit worried? So how do you see that sort of,
Okay,
that
so yeah,
that's
so a couple things I can say is, like, if they tell me something that they shouldn't tell me,
yeah.
I'm not, that that and like, I already own things, I will stop buying things.
Mm.
And I it's a great turnoff, because it's like, what are they telling everybody else, right? That they shouldn't be saying.
Mm.
Um, and so usually what I'm looking for is, when I call a CEO, is I'm trying to figure out the way they think and the way they think about the business, not so
Mm.
much, or like details on why things in the past have changed, like, and a lot of things are like publicly disclosed anyway, so you don't need to, you
Mhm.
don't need to call them. I don't actually call CEOs that often. um,
Mhm.
I might have like 5 or 10 calls a year.
Mhm.
But I try to avoid doing it because, A, they're hard to set up, and B, it like kind of makes me uncomfortable because I don't want to do anything. I won't do anything illegal, but I don't
Mm.
want to be put. But not all CEOs, are fully aware of what the rules are. So they
Yeah.
may tell me something that they shouldn't tell me, and like I said, if they do that, it's an instant turnoff because I won't trade on that
Mhm.
information. I won't do
Mm.
anything illegal. So
Mm.
anyway,
Yeah.
hope that answers your
And
question.
well, it does partly, and it does not. So,
Where did I
but
not answer it? Maybe ask me that part again.
yeah. Perhaps I was just looking for sort of the little parts where perhaps tonality or some things where you pick on and you're like, okay, this maybe makes me a bit more upbeat, so to speak, is what I'm trying to get at. So just some things that within a management team where you're like, okay, this is something I appreciate, so to speak, about the management team.
Yeah. Well, I like hearing about, and this is like an area I might ask a lot of questions about, like understanding their markets and why I should be optimistic about like this being a growing market, for example,
Hmm.
and
Yeah.
what kind of, insight they have into that. So those are the types of things,
Hmm.
where they have unique insights, but you know, it's not insider
Hmm.
information. It's just like how they think about the market. And so I like to know what they,
What their thought processes are like. Yeah, yeah, that's
yeah,
yeah.
yeah, and how they're planning to attack the market. Might be
Hmm.
another interesting area. So there's a lot of things that you know they can say that make me more interested than less
Hmm.
interested. But yeah,
Yeah,
so
and usually in a lot of these microcap companies, management owns a huge part of the business. So how do you see sort of the insider ownership part of the equation? I mean, a lot of investors hold quite a bit of weight in that regard, so they perceive as something that can be a big part of their thesis. Sometimes, at least when it comes to sort of alignment, right, between
yeah.
shareholders and well, the people running the business, right? So how do you see that part of the equation from your
Well,
perspective?
um, certainly having skin in the game is a good thing,
Hmm.
right? But one part of my investment process is also to look at insider transactions. I mean, like, if the if the CEO is selling shares a lot,
Yeah.
I probably am, and they own, a lot of shares. I'm probably not as interested in it because I want somebody
Mhm.
that thinks that, in the future, this is going to be worth more. Now, on the other hand, it might be a CEO that like doesn't pay themselves a whole lot. Let's say the
Mhm.
CEO only makes, 115,000 a year, and it's a fairly, it's a decent size organization. I won't say big, but decent size.
Mhm.
He might be underpaying himself, and but he owns a lot of shares, so he might be selling, you know, for because he has child going off to school, so like he has a tuition
Yeah,
payment to do.
exactly. Yeah.
So he's selling shares for that reason. Um,
Mhm.
so y- you know, I look at like maybe a pattern there. Like have
Mhm.
they been? This is like one time they've been selling like
Yeah.
a small part of their holdings, and
That
they
doesn't
haven't
say
sold
much.
a lot
Yeah.
in the past. That doesn't, but if they've been selling, every day for the whole year, that's a totally different thing. you know,
Yeah, exactly. Yeah.
why would I want to buy shares in a company where the CEO is selling every day?
Mm.
Because
Yeah.
obviously he knows more than I do, right? I mean, now he can't
Yeah.
trade on material information, but
Mm. Yeah.
what's material because maybe a matter of opinion, I guess,
Yeah.
at
Yeah.
some level.
Yeah. And so you've been investing now for over 20 years, right?
Yep.
And when you first come into the space, you have, of course, a strategy, right? Or you have a resemblance of it, right? But throughout the sort of years, you learn new things. Strategy often changes up until you find something that sticks with you, right? So how's that sort of evolution been for you in that sort of sense? Like, how has your process changed, and also partly was there a change because you went from into full-time investing, right? Often it's a difference if you're doing it as a hobby and you manage some money on the
Yeah.
side, but then when you have to do it full time, right? It's
Yeah.
especially the risk equation changes a lot.
So it's probably easiest to say how my process has changed from when I started
Hmm.
till now. I don't know that it's really changed a whole lot in the last couple of years. And like, there's always different nuances, and sometimes there may be even, some of it may even be hard for me to recognize how I've changed.
Yeah.
Um, but So I know a lot more company names now than I have a lot of history with them. So that's one thing that
Mhm.
changes things a lot is like, be like, I don't care what these guys report, I can't trust a word these guys say. So,
Yeah, yeah.
I'm not going to touch it, or,
Yeah.
yeah, I mean, so there's stuff like that. Um, I use a streaming news product that I didn't use initially. I think it was like,
Hmm.
well, I don't remember when I first started using it exactly. It might have been in like 2008 or something like
Hmm.
that. But I've been using it for a long time since I rely heavily on that, and I spend a good portion of my day just reading news. And
Hmm.
what I'm looking for is like, I read pretty much every 10K and every 10Q that um, is published for the bottom half of the market in terms of market cap,
Hmm.
roughly. I mean, I'm not doing that perfectly, but
Yeah,
that's
huge.
roughly what I do. And
Yeah.
what I'm doing is like I'm looking, I'll like it's easier to look at 10Qs than 10Ks because like I'll just look at the 10Qs and like the first two things I'll do is I'll look at what they earned. Okay. And did they
Yeah.
earn more than they did last year or not? And if they earned
Mhm.
more, then I like look at what the revenue did.
Mhm.
Um, and then I start digging into why. And then I might, it's sort of like what I do is I'm looking for what I try to do because I'm trying to cover so many companies is I try to do the process as quickly as I can to
Yeah.
reach a conclusion. Whether I try to reach a conclusion as fast as I can, whether,
Yeah.
the conclusion might be I'm not interested, or the conclusion might be, I need to dig into this further. And I try to, because I'm looking over so many companies, I try to do that as expedient as possible.
Yeah.
So I just tend to prioritize where I look, and revenue growth and earnings growth or decline are two good things to know. Are they
Mhm.
profitable, or aren't they profitable? And
Mhm.
and like any resources in the filings that tell me why whatever
Yeah.
happened or did happen. And
Yeah.
also like, what the press release says, because sometimes it's like, it says it right in the press release, like, well, our earnings are down because, a year ago we finished a large contract. Okay, well,
Mhm.
okay, that explains it. So, or earnings were higher
Very
this year because
uncertainty. Yeah. Yeah. Or that.
because they had a
Yeah.
large contract that they fulfilled. So, oh, maybe
Yeah.
this is one time in nature. So I'm looking, trying to figure out trends
Mhm.
um, as quickly as I can.
Mhm. And what are then coming sort of when you're looking? I mean, what are some red flags that you then find that instantly turn you off? I mean, of course, we can say, well, the earnings decreased, and for that and that reason, those are some of the obvious parts in most cases, right? But perhaps some of the more nuanced things that uh, perhaps happen often, but get neglected. I mean, sometimes it can be capital structure, for example, right, where
Yeah,
you have management team really you can tell that they're pocketing it in for themselves, right? But
yeah.
so how do you see that sort of things that
So
might
share,
be overlooked?
yeah, share structure is something I look at closely. I mean, I'm also looking at, like, in addition to number of shares outstanding, and by the way, I don't have any hard and fast rules. Some
Mhm.
people are like, oh, they'll only,
Yeah,
look at a company that has, a small number of shares. I'll look at, like, companies that have large number of shares, as long as the ratios make, as long as they're profitable, and the ratios make sense. I mean, I don't care. It's just, they're just ratios. But you know, if I had two equivalent circumstances, or um, you know, PE ratio wise, I'd probably prefer the one that had a lower share count. But
yeah,
also,
exactly.
low share count can be a bad thing too, because if they're let's put it this way, I'll go extreme. If there's only one share outstanding, it's going to be highly illiquid, right?
Yeah,
I mean,
yeah,
no, I've never seen a situation where there's only one share outstanding, but you know,
yeah, of course.
um, so I, in this business, I don't think there's any, for the most part, hard
That
and
set
fast
rules. Yeah,
rules that are like, it never makes sense to violate. But
mm.
there are rules that I think make sense to, 90% of the time you shouldn't violate that rule.
Yeah, yeah, exactly. Yeah, that's sort of my interpretation as well. Because when I look at things, I tend to think as having rough guidelines that
Yeah,
sort of
yeah,
guide me, right? But at the end of the day, I have to make a judgment call, as you said, right? Determine wherever this might be an exception, or where you can say this has a better probability that it's on your side, right? Might not turn
yeah,
out that way, but as long as you take sort of a measured approach, right? And
right.
methodological one, then you're better suited to sort of navigate those risks. And
Yep.
we're sort of coming towards the end of our interview. Are there perhaps any last things that you want to mention to the audience? Any sort of tidbits and so on?
Um, I don't know. I think the microcap space is a great place to invest, but you have to be, I think the key, if you're going to invest in that space, you have to understand uh, investments. It's not a place for people that, in my opinion, it's not a good place for people that don't have experience in investing. I mean, it's sort of I guess, it's the deep end of the pool, so to speak.
Yeah, yeah,
Um, so you need to have some investing knowledge. I would say, if you're interested in the microcap space, I would first get a introductory book on
mhm.
accounting. I think I've
It's like
mentioned in the
first
past.
learning. Yeah, it's like first learning swimming, and then you learn how to dive, and it's like, yeah, so to
Yeah,
speak.
yeah,
Like, yeah,
right, right. So yeah, you have to take a measured approach, and when I started out investing, I knew almost nothing. But I've learned, I've learned a lot along the way, and but I
yeah,
still have more to learn. There's always more to learn. That's
yeah, yeah, of course,
that's
yeah.
the one thing that I will say is part of the reason that I do this for a living, is because I I find it very interesting. The learning process is very rewarding for me.
Mm,
And one of the reasons I left engineering was I felt like, well, I could solve any problem. It was just a matter of time and money, you know,
mm,
if it's a solvable problem.
yeah,
Um, and I feel like investing is more,
intellectually
and
rewarding.
yeah,
Yeah,
yeah, yeah. And maybe a little bit more challenging than engineering at this
mhm.
point. Not that engineering isn't challenging, because it certainly
Yeah,
is,
of course. Yeah.
but anyway. So I think those are my parting thoughts.
Yeah, I mean, it's definitely that case. If you find, if you're sort of willing to go through all of that learning process, and always willing to learn a new thing, and learn a new sector, or learn whatever it might be within the markets, then it can become very intellectually rewarding for for those
Yeah.
that seek that, right?
Yeah.
And yeah, Mike, I really appreciate having the opportunity to talk with you.
Sure.
So
Absolutely.
thank
I've
you
enjoyed it.
for all the comments and the little tidbits, and yeah, thank you for your time.
You're
Yeah.
welcome.